And Jen, I mean, this is quite a miss, the retail sales particularly. Now, give us a sense of what that really tells you about the economy. And you know, when we had that import number, which is a blowout, how does that sit with this? And how would you characterize the slowdown in China then?
Yeah, I think indeed, throughout this year, we've seen actually Chinese consumption recovery has been lagging and weakening, and the August number was clearly a much bigger miss than generally expected. I think that partly reflects a big shock from the Delta variant outbreak and the government's zero tolerance approach in the month of August. And also, to some extent, the prolonged weakness in consumption likely will continue, reflecting a changing in consumer behavior post-COVID and some structural factors.
What do you think people were missing, though, in this number? I mean, this is quite a miss right now. What do you think is actually leading and driving this softness in this number?
Yeah, I think one is the catering sales likely be contracting during the month of August because of the Delta outbreak spreading into 20 provinces. And also auto sales, by our tracking, actually have also been contracting in the month of August. Both accounts for 10% of the retail sales respectively. And obviously some regulatory crackdown and may also have had some negative impacts in the month.
David here, what would your assumption be on retail sales for the year? Because so far, even with this quite a bad number, the average for the month on retail sales is still higher than 2019. So do you expect the recovery to continue? And I guess part of the question as an economist, and to Yvonne's point, how do you measure consumption and small businesses and whether or not they are faring and how they're faring in this sort of environment?
Yeah, actually, our view has been that the Chinese growth has already peaked the Q4 last year, and including investment, but as well as consumption and retail sales. Actually, retail sales not going back to the Q4 level and certainly not the pre-COVID level. And going forward, actually, because of the slump in August and also likely in Q3, because of Delta and other shocks likely to be temporary, and we do expect actually a rebound in PMI in September, certainly services PMI. And we also look for some mild recovery in GDP growth in Q4, both on a sequential basis and also on a two-year average basis.
Okay, so Jian, September might be a bit weaker than expected, but this is much weaker than anybody was, really, apart from one person, as David mentioned here as well. But are things likely to get worse before they get better here?
Actually, I'm looking for some mild recovery, as I just mentioned. Because August, I think the economy was hit by quite a number of factors we discussed earlier. And we also know that the PBOC, I think the whole the goal and the mandate for the central bank in the past months has been to try to boost the credit supply. And they've held meetings, they've issued 300 billion in relending facility. I think the purpose for the PBOC or the mandate was to try to boost the credit growth, which actually fell to a record low since the data available in 2003. So, and with the PBOC announcing more liquidity supports and 300 billion lending facilities to small and medium enterprise, and we do expect the credit growth to bottom in October and improving in November. So, I mean, we may still have some near-term setbacks. Also, housing market has been in the contractionary mode with home sales contracting in August and the deepening contraction extended in September. But I do look for some improvement towards the year end.
I was wondering if you could help us understand something that seems contradictory, but I'm sure it makes sense. The government's looking to put in a little bit more fiscal support, but also they're looking to cool the housing market. What would be the net effect, in your view, of those two things?
Well, housing has been the biggest driver to growth post-COVID recovery. and infrastructure investment, which would get the supports from the more proactive fiscal policy, has been actually rather mild, 2-3%, and in the most recent months has been contracting. So I don't think the more proactive fiscal policy necessarily would offset the drag from the housing market. But at the same time, I think there's I think the loosening of the housing market have actually already started on the margin via the credit side, with the PBOC have asked the banks to extend more lending, mortgage loans, developer loans that was in the backlog in the month of August. So I think that would continue in September.
Yeah, let's focus on the property market, because we continue to watch all the news surrounding Evergrande right now. And at this point, without any kind of government bailout, this looks like just like a downward spiral for this real estate developer. Do you see this impacting the economy in any way? How does this actually spill over to the sector, if it does at all?
Yeah, I do think that the property sector remains an important pillar to growth, as seen from the past 18 months. So I think the government would be mindful about not only social stability, but also economic impacts, especially when we see, the continued weaker than expected data in August and also in July. So I think the loosening and the fine-tuning of some of the policies on the credit side and on the lending side should be starting now.